Let's be honest, EV stocks have struggled big time in 2022 as the demand for risky assets has come to an aggressive stop. But what many investors don't realize is that although many such EV startups will indeed fail, some stocks will actually have a great chance at succeeding given just how massive the EV market is in the US. And one such company is Lucid Motors, for which I've gotten many requests to cover its financials and their latest earnings report to get an idea for the risks and the opportunity behind this highly popular stock. And so in this video, I'll be doing exactly that. And at the end, I'll go over the Lucid stock chart specifically to see exactly where we could see a near-term bottom for the share price, because obviously the stock has gotten destroyed over the past 6 months. But before we get into it, guys, make sure to drop me a thumbs up and hit that subscribe button if you haven't already. If you've been in the stock market for the past year and a half, I'm sure you need no introduction to this specific stock, which is a company that went public right around the start of 2021 through a special purpose acquisition. And I think although at the end of last year, we saw a lot of hype getting priced into the stock as we saw companies like Rivian go public and Tesla stock obviously go to the moon, right now the stock is definitely coming down to a very attractive price point, which is why for me, I think it's a great time to start looking at the business of Lucid, understanding their deliveries and their actual growth opportunity over the next 3 years, because although there are some nuances, there is still a very massive total addressable market for this stock. And this brings us on to probably the most overlooked aspect when it comes to Lucid Motors, which is their racing pedigree and the innovation behind their battery pack technology. The first time that I personally heard of Lucid Motors before the stock went public in 2021 was actually when I heard that they actually powered the Formula E racing series, that is a worldwide racing series that runs electric cars across 4 different continents and 22 drivers. This was a pretty big deal because Formula E by far was supported by massive manufacturers such as Audi, NIO, BMW, Mercedes, and even today they have over 10 teams that are competing for a massive title. And as far as I know, Lucid Motors subsidiary company Ativa supplied the battery pack for the Formula E series in 2018, 2019, and 2020. And the reason why that's a massive deal is because in 2019, Formula E went to a new generation of cars that did not have to be recharged during a race. You see, the first generation cars that launched in 2014 could not actually complete a full race distance on one charge. And so the drivers had to physically get out of the car during the middle of the race and get into a second car that was fully charged before they had to finish the race. And so with the second generation, not only did we get faster cars, but we got much better racing because the drivers did not need to swap cars during the middle of the race. And since Ativa supplied the heart of these cars, which is essentially the battery pack that sits right in the middle of the chassis, that was a pretty big deal for Lucid Motors, because it would be the first time in recent history that a company with a lot of intellectual property and a very severe technological advantage would be going public. And if you pair that with the fact that the Lucid Air, the company's flagship sedan, won the 2022 Motor Trend Car of the Year award, that's a pretty big sign that this company is definitely on the right track in terms of just how innovative, high quality, and efficient their product is. They're able to squeeze out roughly 500 miles of range from a 120 kilowatt hour battery pack, which is driven by a lot of small scale innovations in the battery pack, the battery modules, and the way that they cool the individual cells inside those packs. And so the whole reason why Lucid Motors is on my radar as an investment opportunity is because of this advantage they have in the technological side of things, which is something a lot of EV startups simply don't. And if this edge is able to be reflected in the production of this car, then these guys' margins and their cash flows are going to be insane over the long term, if obviously there is enough demand for this product. But obviously all that we've covered so far has been some of the good sides of Lucid, their technical advantage, and the quality of their product. And we obviously need to address some of the shorter term problems that this company is facing in terms of their earnings support and their production forecast. As you guys can see, they obviously missed revenue and EPS estimates for the fourth quarter. And although Peter Rawlinson has said that production cut is primarily driven by supply chain issues, it's definitely safer to kind of cut your production when you don't know the actual demand trajectory for your product over the next couple of years. Because obviously if they overproduce and undersell, that could cause a lot of problems for Lucid and a lot of concerns from investors. And so for me, what I'd be looking for in the Q1 and Q2 earnings report is what exactly is their conversion ratio looking like from their reservations into actual deliveries. Right now, around $2.4 billion is the potential sales amount for their reservations at 25,000, which obviously is very big, but that still puts this company at a pretty expensive price to sales valuation based on the $35 billion price tag you're paying for it right now. But at least for right now, if we start seeing a slowdown in their delivery to production ratio over the next couple of quarters, then I think Wall Street is definitely not going to like that, and we might see a multiple compression that could bring the share price down a little bit more than it already has. And one of the good tailwinds here is that this company is sitting on over $6.5 billion in cash, which is a significant runway this company will probably have until at least 2024. And so that's another thing we definitely want to keep in mind in the next few earnings reports, is to get an idea for their quarterly cash burn through their production ramp up. At least for right now, these guys can cover all their debt and their liabilities, which are sitting at around $3.9 billion. And another thing I'd like to see is that institutional ownership for Lucid right now is sitting at around 68%, which means that institutions are adding the stock to their portfolio to gain exposure to the EV industry in general. If we now move on over to look at the Lucid stock chart, as you guys can see, we saw a massive deleveraging happen in the stock from around $57 in November all the way down to $21, which means that you're definitely getting a very good deal compared to what a lot of other retail investors paid for this stock over the past 6 months. And on the weekly time frame, the RSI is trading right around that 38 level, and we're coming down really close to this general $16 to $17 support region from which we've seen the stock price bounce once and twice. And for the short period of history that the stock has, it has a history of pumping up, pumping down, and then consolidating sideways for a couple of months before making its next move. And that right there is also another critical thing that really makes Lucid stock very attractive as it's coming down, which is the fact that this stock can often become the proxy for the speculative EV space. Some people might say that that's Tesla's job, but Tesla is now a multi-$100 billion market cap. So it's actually a mega cap right now, and it's a part of the S&P 500 index. So this stock can't really move that much as compared to a stock like Lucid Motors, which is only trading around that $30 billion mark. And so sometime over the next couple of quarters, we start seeing some more volume flow into EV plays, which will definitely happen because of the cyclical nature of the market, then this stock could definitely perform quite well. Right now, we are below all the moving averages on the daily time frame, which means that I would look for an entry point around this 16.5 and a $13 region if we get there. And unless we can reclaim this 200-day and the 50-day moving average, we're still going to unfortunately remain in a downtrend for the short term. But again, if you're looking at this from a 12 to 18 month perspective, then the risk to reward on Lucid is quite attractive right now. And obviously, if I start seeing some good deals and accumulating shares in Lucid over the next few months, I will definitely let you guys know and make a full breakdown video on this company. But anyways, guys, make sure to drop me a thumbs up if you found some value from this video. Let me know down in the comment section below what you guys think of Lucid Motor stock. I definitely think it's a pretty interesting opportunity right now, although the price is still a little bit expensive. But anyways, guys, I hope you enjoyed this video, and I'll catch you guys in the next one. Take care.